Good morning and welcome to the 6th Annual Commercial Real Estate Leadership Webinar. On behalf of myself, Leah Chrisman, conference producer, and Linda Chrisman, owner of the Mid-Atlantic Real Estate Journal, and Ronald Shapiro, producer of today's event, we would like to thank you all for joining us this morning. As you may know, the Mid-Atlantic Real Estate Journal is a commercial real estate trade, print, and digital publication publishing twice a month. We have a readership of over 25,000 industry professionals throughout the Mid-Atlantic region. We will open today's web conference with our expert speaker, Jose Cruz, Managing Director of JLL. He'll be giving us a general overview and talk about the state of the economy. We will then open it up for any questions you may have for Jose. Once he is finished, we will introduce our panel of amazing speakers, our amazing women who will discuss their role in business, how they got to where they are today, as well as their successes and challenges throughout the journey. Before I turn the program over to Ron, I would first like to thank our sponsors for this event. Without their generous support, this conference would not be possible. Thank you to our bronze sponsors, JLL, Next Generation, Sabre Law, and Progress Capital. Thank you to our corporate level sponsors, CPC, RJ Brunelli, and Emigrant Mortgage. This program will be recorded and a copy will be available to share or upload by Friday. The chat box will be available during the program. All questions should be sent privately to Ron Shapiro. Simply type in your question, who you would like to answer it, and Ron will take it from there. Now, I would like to introduce the moderator of today's event, Ronald Shapiro. Ron is the Executive Director of the Rutgers Business School Center for Real Estate Studies. As Executive Director, Ron is responsible for developing the strategic vision and long-term planning for the school's Center of Real Estate Studies. He has a full oversight in management of all outreach. Please welcome Ron Shapiro and his amazing speakers.
Well, good morning, everybody. Thank you for attending. I must say before we start that this particular program has been long in the making. We started this discussion about doing this most likely at the end of last year, and finally we are doing it. So let me introduce, to get the program rolling, let me introduce Jose Cruz. Jose is a Senior Managing Director and Co-Office Head of the New Jersey office of JLL Capital Markets Americas. Jose specializes in investment advisory throughout New Jersey, New York, and Connecticut, and also oversees the day-to-day operations of the firm's New Jersey office. Jose has more than 25 years of commercial real estate experience and has been involved in over $28 billion, that's with a B, billion dollars of office, industrial, retail, multifamily, and land sales. Jose will talk today and will present his views of the state of the New Jersey real estate markets. Jose, take it away.
Sure. Thanks, Ron. Appreciate it. By the way, you make me sound super old with those comments, but I'll take it. So one, I want to say thank you for having me today. And it's an honor to be here and honoring the women in real estate today. So thanks again. And in light of our presentation, I actually wore a tie today. For those of you not really able to recognize what I have around my neck, that's what we used to wear back in the day. So I wanted to start there. So what I wanted to cover was a little bit of what we're seeing in the market today. And I'll talk a little bit about kind of pre-COVID versus post-COVID, as well as some of the trends that we're seeing today. And I'm also going to highlight some specific transactions that I think have a kind of an interesting kind of angle to them that speak a little bit more about what we're seeing in the market today. So, and I thought it might be interesting too to talk about them, the different product types on their own, because we're in different cycles with multifamily, with industrial, with retail, and office. But I will start with some general trends. I'll tell you, transaction activity this summer has been much higher than it was in the spring. and for obvious reasons. We're seeing more action now, more capital that's comfortable in forecasting kind of where we're going. So more transaction activity. The debt markets have gotten much better for multifamily and industrial. Still a little challenging on retail and office today, but there is capital available, and I'm going to talk specifically about that. The buyer pool today, it's I would say majority private for the state of New Jersey. And again, it's very specific to buyer type, but we are seeing a lot more institutional capital now. Pension fund advisors, insurance companies, REITs. So the activity now is among, and that's a positive sign that we're seeing the different buyer pools transact in the state. I will say underwriting has gotten a little more conservative. Rent growth, and again, and I'll deal with it on an asset by asset basis, but rent growth, a little more conservative in 2020 and 2021. Bad debt expense, basically 1.5 to 2 times higher on the underwriting today. So we're seeing some of that kind of positive on the debt side and the cap rate side offset by the underlying assumptions. So, Lee, let's go to the next page. Okay, so I'm going to start with multi-housing. So just a couple of trends to talk about. We are seeing the suburban and secondary markets start to really excel, compared to some of the urban markets. It's difficult to get stats specifically, but I have seen numbers that some of the more urban markets are seeing declines in effective net rents, anywhere from 10 to 30%. And concessions today for Class B and C are rising a little faster than Class A, as we're seeing, with the job markets, we're seeing that impact some of the B and C assets a lot more than we are on the A's. And that's a lot due to that kind of impact on retail, impact on restaurants. And looming expiration of the PPP and CARES Act, it's definitely on the radar for a lot of the investment community today, trying to gauge what does that mean specifically for their asset class, for their specific markets. So that's something that's difficult to quantify right now, but definitely being discussed. And occupancy and collections have been the main focus. I mentioned it before. In terms of the underwriting, occupancies have held up for multifamily anywhere from kind of in the 93 to 97% range is the numbers we're seeing. You do have some assets that, for whatever reason, in their specific submarkets did not perform as well during COVID, but we're seeing that turn around now. We've had assets that dipped into the kind of lower to mid 80s, and are now seeing a turnaround. And collections, which I was very surprised about, even through COVID, even going back as far back as March, we saw collections hold up anywhere from kind of low to mid 90s to 99. Yeah, we've got some assets at 100% of collections. So there's been some very positive trends, and multi continues to be one of the product types that the investment community is chasing very aggressively today. And as I mentioned before, number 5 here, the investors underwriting rent growth conservatively. I mentioned kind of 2020, I'm going to probably say 0% rent growth, and 21 a little bit better, right, to 1.5. But I'll say also 22, 23, and 24, we're seeing groups anticipate a recovery. And some of the underwriting we're seeing there could be as high as 5-6% annually. So 3 to 4 for sure, but on the far end, kind of 4 to 5, 6. So anticipating a recovery later on. But I think overall, the multi-trends are positive. And I thought if you want to go to the next page, I'm just going to highlight just, one deal here, and then I've got a couple of others to mention. This is a asset in Central Jersey. We closed this just after COVID, kind of May 2020. We had awarded it pre-COVID, deal size, a little over $66 million. It's about $300,000 a unit. That's a 5.1 cap. That pricing is very consistent with what we saw pre-COVID. There was a very negligible change to price on this deal pre to post-COVID, and the activity was strong. You'll see there 85 CAs signed, 8 tours, 6 bids. So good response to the asset. I would tell you if that asset launched today and we were taking bids towards the end of the year, that pricing would still be consistent and may even be a little stronger today. So good activity on the multi side. And this was a 1031 buyer out of New York. So that market remains active, and we're seeing more of that. Let's go to the next page, Leah. So just a few transactions to highlight that we're actively out with now. I'll just pick a few because I want to be able to get through everything because we have a lot of great speakers today. So I want to make sure we allocate the time. Avalon Somerset, just under 400 units. Just put that in the market. Deal size, call it 115 million. Light value add, but significant tour activity out of the box, and that's a mix of private and institutions that we're seeing show up there. The Trenton multi-housing portfolio, slightly smaller transaction, good, solid Class A, infill market. There haven't been all that many comps in that sub-market, but we're pretty bullish that the market's going to get there. Deal size here, call it about 150,000 a unit. So there'll be strong demand there. And just outside of the New Jersey market, Harbor Landing, Class A asset, great market, great location. That's going to be very aggressive in the pricing and the fours on a cap rate. And the debt for some of these assets, which I'm going to talk about soon too, we're pricing sub 3% today. So those yields with potential growth in the rents and even just looking at expenses of the assets, we're seeing great yields on these things. That's allowing pricing to get more aggressive. So really good push today on the multifamily side. If you want to go to the next page. So just to point a few others out, Solaris Lofts, for example, in Jersey City. So that priced post-COVID. That was a true kind of first post-COVID deal that we priced in April. And we're in due diligence now, but that pricing's pushing kind of a mid-4 cap rate range. Great per unit price, very aggressive on the cap rate, deal size manageable, solid submarket within Jersey City, and 100% collections there. So that's got a lot of interest. We'll just keep going. One to talk about here, we talked about Avalon Ted Falls. Boldera Parsippany is a deal we also closed post-pandemic, awarded pre-pandemic, closed post-pandemic. Not a dollar change in price there. So great performance by the buyer, kind of working through all the issues that we were seeing in March and May. We closed it in April. That pricing at $68 million at $320 a door for Parsippany is amongst the highest we've seen for that submarket. That cap rate was sub 5, so very aggressive, good pricing, and a deep pool of buyers there. Let's go to the next page. Want to go to the next? Can you go to the next page, Lee? There we go. So let's talk office for a second. So different dynamics in the office market today. We're very bullish. One of the trends that we're seeing and very bullish on suburban office market, which has been challenged over the last 10 years in New Jersey. We're seeing some of the migration start out of New York, conversations, some smaller leases for sure. We haven't seen the large move outs yet, and we're hopeful that we're going to start seeing, even if it's not a move out of New York, an expansion and providing an opportunity for some of the workers in the suburbs to the extent that they want it. But we're still working through that. And it's early in this process. It's very early. I'm very curious to see what happens after the Labor Day holiday here and what the office market tenants are doing as they come out of the city. But from an investor perspective, there's a lot of significant conversation underway right now with how are we pricing these assets today and where are we seeing the demand coming from. From a tenant perspective, the trend seems to be more flexibility in the space. I think we're all experiencing kind of the get back to work and how are we getting back to work, and we're seeing that it's leading to, at least out of the gate on the short term, some shorter term deals and smaller requirements. I think over time we expect that to change. Tenants want that flexibility today in case they need to contract space, but also expand space too. So I think long term we're pretty bullish on the fact that the office market, especially in the suburbs around New York, is going to be strong. So number three, we're working from home has definitely become much more productive. I think as everyone kind of settled into what we saw, as when we first kind of ran into the COVID, and even with the new social distancing, we have seen a slight contraction, and I think that's as much as it pains me to say, we'll see that continue in the short term. But I do think as we settle into the new norm and kind of anticipate demand and people going back to work, I expect that office market to bounce back pretty strong. Certain office sectors are doing well. Long-term single tenant product today is very hot. People want and investors want that predictable cash flow, right? They want to know that you can value that stream of cash flow and rely on it. So that's something that we're seeing a lot of activity in today. And it's pricing pretty aggressively. And there is good debt available for that single tenant credit term location. And that actually transcends product types. That's not just office. We're seeing that in retail and industrial. So that predictable cash flow, that stable tenant has a lot of value today in this, we'll call it kind of more unstable economy. Lab space I wanted to mention, I think that's a unique product type that's now seeing kind of an uptick in activity. And we're going to be working on a large sale of a large campus that has about 1 million square foot lab component. And we've been getting a lot of kind of pre-marketing inbound calls on that. So we're seeing that start to uptick. As I mentioned, and I already talked about 5, we are going to expect to see some sublease space hit the market. But we're bullish long term that's going to fill pretty quickly. So let's talk about one deal in particular that I wanted to mention. If you want to go to the next page, Leah. So Mountain Heights Corporate Center, we closed this in May, also post-pandemic. And smaller deal size in the 26 million range, $88 a foot. So good basis. The deal had its challenges with some tenant rollover as well as some space that wasn't being occupied. But I think the good news was the private buying community saw the value here as good basis, good location, good quality real estate, and the opportunity to add value over the short term. So we did see good activity. At 78% leased, you could lease up a significant portion of the building. So I think this is one that was a good one to get done because it had its challenges pre-COVID. Then with COVID thrown in, we really saw a good performance by both the buyer and the seller here to get the transaction completed. So let's go to the next page. So just a few deals to highlight that I thought were interesting. We're in the market with a Core Plus deal. The Summit East corporate campus, it's about 600,000+ square feet. The occupancy will be diminished when we close or a year into it. But the demand for that asset, that location, it's quality buildings. It's upside, it's Summit. There's a lot of rationale here. Why we're seeing investors flock to this deal. I mean, we're up to over 20 tours, and we expect a really good response on the bid date. Just one other one to highlight here: 44 Whippany. That's a building that we sold about 3 years ago, and the individual owner put in well over $7 million into the property, actually $17 million into the property. And we saw that pay off, and we saw occupancy increase. We're now almost 100%. And that's another trend that we see out in the market, which is owners that put capital into the properties, maintain the asset well, do get a disproportionate share of the tenant demand, and therefore the investor demand at the end of the day. Let's go to the next page. So just to highlight one here that I thought was interesting, 85 Challenger. That's a deal that's under contract now. So that's in Richfield Park. The buyer pool there ended up with offshore capital, which that's something that we haven't seen as often in New Jersey. This is a German advisor with South Korean capital, a South Korean client, that stepped up here pre-COVID when we awarded it, did a great job, and post-COVID, not a dollar change in price. So that's about a 6.9 cap. It's a sub-7 cap deal, and pricing at $250 a foot, deal size, we call it $60 million, very aggressive pricing. So But the offshore capital showing up now for certain office transactions in New Jersey and maintaining pricing in a post-COVID world was a great trend and one we're excited about. Let's go to the next page. So we already talked about Mountain Heights Center. We can move on. We can move on to the next page here. So let's talk about industrial. So industrial, I don't have to tell anybody on this call, really, really strong today from an investor perspective, from a tenant demand perspective, a lot of activity. One of the trends that I wanted to highlight was, core and credit quality deals are trading over the corporate bonds. We're working on a deal right now where the 10-year corporate bond is trading at 1.9%. The cap rate is a 4.1. The buyer basically said, look, I'll call it 200 plus basis points over the 10-year bond. I've factored in my real estate risk, so I'm comfortable here. And that specific deal had 15 bidders, 3 rounds of bidding, really aggressive pricing. So the demand for credit, term, location, and quality, especially on the industrial front, continues. Low leverage is being used. A lot of the institutional buyers are literally either using no leverage or up to 50% max. And part of that is, even though the debt's so cheap, they're trying to put capital to work today. And that's one of the things that really is driving the demand for industrial from an investor perspective, is just a kind of a lack of opportunities, and really in a lot of the funds from the institutional groups just being underweight in industrial today. Land pricing at 5% return on cost, and that continues to tighten. I mean, there's some land sites that we're doing at $475, and the per square foot does not seem to bother anybody as we push in that 200 plus range. So very aggressive pricing, and that's also being driven by the demand, and we're seeing rents increase. So that's allowing us to move our numbers as well. Distribution buildings experiencing cap rate compression due to the trends here. Yeah, I think that's an easy one. E-commerce continues to grow. It's now 30% of retail sales. I remember seeing a stat, I can't remember years ago, but it was 2% of retail sales. So that cap rate compression, we're now seeing cap rates pushing, honestly, sub 4 in some locations. And the niche classes are there too, whether it's cooler space, flex type product, truck terminals. We're seeing that tighten as well, just because there's a lack of opportunity. And also a lot of the investors are getting more comfortable with that asset class and with those asset classes. So let's move on to one deal in particular. We don't have to spend a lot of time here, but what I thought about this is a secondary market in Connecticut that's trading at $100 a foot. I mean, call it 7 to 10 years ago, you couldn't get anybody to pay $100 a foot for New Jersey industrial. So now $100 a foot is considered kind of Class B market and looking for yield. So that's how quickly the market's changed. Let's go to the next page. So just a few deals to highlight here. Merck Branchburg, that's something we're working on right now. That is a, call it $25 million deal that we're seeing a lot of activity on. Preemptive bids, 25 plus tours, great action. And the rest of these are really more multi-tenant, Class A to Class B plus industrial that we're just seeing incredible demand today. So, and that demand is institutional, private funds, private equity. It really is across the board. Let's go to the next page. So this Lincoln Logistics at Hicksville, Long Island, there's a lot of demand for Long Island product these days. It's very aggressively priced. That deal's pricing close to $400 a foot, which is a record for that market. We're seeing the Rockland County Light Industrial portfolio, which is in due diligence now. That's multi-tenanted. That pricing in the 5s on a cap rate. So that's something that I think we expected. We expected it, and I was just the depth of that buyer pool for that asset going through multiple rounds of bids was even better than we thought. So I'll continue to move it along quickly. I don't want to get caught up on this. I know we're running out of time. Just one small one to point out, that 1890 Swarthmore, that's a smaller deal, but $145 a foot for the Lakewood submarket. So South Jersey, very aggressive pricing, great demand, multiple buyers. So I can't say enough about industrial today. Let's go to the next slide. So retail, spend some time on the trends and keep it moving. Outdoor shopping center collections have improved. Locally, we've seen it. Nationwide, we've seen it. Indoor malls still struggle. We're working on several repositioning, redevelopment of malls throughout the tri-state area right now. And that redevelopment could look at industrial, could look at multifamily, could look at medical office. So really, the demand to redevelop those malls is there. And not only the malls, but the boxes, right? The standalone boxes that we see on some of the major highways throughout the state, with some of the retail bankruptcies that we've seen, you're going to see those redeveloped as well. Successful online retailers, yeah, look, we're seeing them increase traffic. We're just not seeing as much of the brick and mortar locations. I don't expect as much of the brick and mortar locations to go away. They still need both. And I think that's going to continue. We may see some reduction in the brick and mortar, but we're not going to see that go away. I cited Target as an example, but there's so many of them now. So Amazon, Walmart, some of the larger retailers are incorporating distribution into some of their retail sites. And they're using it. I mean, we're in conversations on seeing some of these retailers for drive-through pickups, for actually socially distancing pickups, for pieces of their retail space to distribute to other stores within the region from the same retailer. So a lot of trends, and this is ongoing, this is changing, this is very fluid right now. So some really great, I think some changes that I think are going to be positive for retail long term. The triple net lease market, incredibly strong right now for the same reasons I mentioned on office and industrial, term, credit, location, that predictable income. Some of the cap rates on the retail for the right location, we're seeing in the fours. So where that perception of retail, not trading or not, not doing well, there are a lot of retail deals that are happening. We're seeing grocery anchored retail, especially standalone grocery anchors, trade in the fives. We closed 2 year to date and have another one that we're working on right now. So there is a retail story out there for investors, and they still need that allocation, and there is still demand for it. So I just wanted to highlight that as it relates to retail. Look, the bankruptcies are going to continue, unfortunately, in the short term, and I think there's a concern for sure on the restaurant spaces, as well as some of the bigger boxes that I mentioned before. So, but the good news is there are alternative uses for those units, and we're in the middle of spending a lot of time on that. Let's go to the next page. So I just wanted to highlight the Middletown ShopRite. This is a transaction that happened post-COVID. Great activity, $30 million, $156 a foot, great pricing. The store won't be delivered for another, I think where we stand today, probably another 6 months, but when we sold it, call it 9 months to a year. And I think that just speaks to the strength of that market and the strength of this tenant and the strength of the right retail, that you do see demand and you do see significant activity for this type of retail. So the grocers here, I think, and the grocers, the long-term credit leases and the redevelopment deals, retail, we're as active as we were post-COVID with a different type of retail. So let's go to the next page. So we don't have to spend too much time here. Just suffice it to say that single tenant, whether it's Tops, whether it's Stop and Shop, that demand is out there today. And redevelopment deals like 99 US Route 22, that has significant activity today to take that former Bally's and redevelop it into an alternative use. So that's along the trends that I mentioned before. Let's go to the next page. I know I'm running low on time. We talked about the Middletown ShopRite. Let's go to the next page, Leah. So on this one, I think the interesting thing to point out is this Boulevard Mall, which is upstate New York. That today, I think if that were out there today, we would look at alternative uses. and potentially mixed use, right? Potentially some multifamily with some medical office, keeping some of the retail potentially. So it's not just a complete redevelopment, it's alternative uses. And I do like the mixed use concept. Let's keep going. Let's talk about development sites, because this is taken on some pretty good interest as of late. So developers as well as capital partners are looking at new site acquisitions, and we've been surprised as to the demand here, thinking that the initial thought was, look, there's a lot of risk in developing today, but given the fact that lease-up's not starting for another couple of years, and we're, as I mentioned before, we're looking at potential rent growth trends, there has been real demand from the development community to acquire sites. And these larger townhomes and larger concept units have become more attractive. I think, we're seeing some migration out of New York, and we've all seen the stats, and where we're seeing New Jersey, single family home sales up over 30%, pricing's up over 15% year to year. And it's people looking for a backyard, for a home office, for a home gym. And no different here, where we're seeing that activity translate into for sale housing as well, whether it's townhomes or larger units. So real demand coming from that. The home builders, volume and pricing there as well. They're showing up on, if not every deal we have, almost every deal. But location, obviously important. The one change I'll say, and I noted it here, not as much of an emphasis today on the transit-oriented development. We're working on a suburban New Jersey transaction right now that has a for sale component and a for rent component. That's not walkable to the train, but it is walkable to a hospital. So that site is seeing incredible demand with preemptive offers from everything from home builders to private developers to private equity. And this is another trend that we're seeing a lot of, a very, very heavy focus today on real estate taxes, market taxes versus a pilot. And I'll tell you that the trend isn't so much that, the pilot's saving you money. That's not what the trend. The pilot is just providing clarity and some ability to underwrite and some predictability in the taxes. So that's the value of the pilot, again, isn't so much that you're getting a break on your taxes, but just that you can underwrite it appropriately. But taxes come up in every conversation and every transaction we're working on. So that's a big topic, especially in some of the towns. We'll be struggling with budgets in the coming months. Let's go to. I'll highlight one or two here, so as not to use up too much time. But 65 Church. This is an interesting example. So closed actually. It says October 2020, but it's actually earlier this year. 84,000 a door off the waterfront. Right, this is in Montclair. So once you get outside the waterfront, that's a strong price. It also has a 10% affordable component. So once you factor that in, the pricing is closer to 95,000 a door. So the demand for well located, and this is a kind of a manageable size deal, well located, right size transactions at pushing 100,000 a unit, infill is very attractive and really highly sought after today. Let's go to the next slide. So just to mention a couple deals that I think are interesting. The Soma portfolio, this is in Newark. So this is well located infill urban locations, and the demand here from across the buyer pool, which was really good. I mean, private, again, institutional, some insurance company, some of the biggest private equity funds looking at it as well. So good demand there for infill Newark. Grove Street, Jersey City. So another well located site. Jersey City's always been strong on the demand side, and we're seeing rents there trend today a little slower, but the trend over time, over the next 12 to 24 months, is very positive. We don't have to talk about the rest of this. We continue to move on. Yeah, we talked about this. Let's keep going. So the debt market. I'll do a quick 2 minutes on the debt market because this impacts literally, obviously, every deal. So retail. We're seeing more 50% LTV than obviously 70% LTV. You can still get IO financing here, and I know you're going to hear from some of the panelists here talk about that, so I won't spend too much time on it. But The debt's still available. The weighted average lease term is important on retail. You have to know that you have credit and term. Otherwise, it's going to be really tough. Multi-housing, you can see that. I mean, I can't recall it ever being lower, kind of in the twos with significant IO at 75% multi. And that's a lot of agency type debt today. You can do bank, you can do insurance company, but the LTVs are lower. So the agencies have been incredibly busy. Office, very specific to the tenancy. Are they in occupancy? Are they not? The LTV, very difficult to get up to that 75%. The lenders want some coverage. The term's going to be important, the weighted average lease term, and the credit. So not surprising on office and retail. Multi and industrial, really strong. I mean, you can put industrial money out on I would say it's very difficult to find a deal you can't finance on the industrial side. And I think that was it. If you go to the next page. So just summary and conclusion. I think short term, I think we all know we're in for some bumps still. But I think for the most part, we're seeing good activity, good positive mid to long-term trends from both the investors, from the tenants, from the debt side, from the capital market side. Like, I think we're all curious to see what's going to happen as we go into the fall, as it relates to, God forbid, a potential COVID resurge and what happens with the election. But I'll tell you, as of right now, we're as busy as we've been, with a lot of groups trying to get transactions completed while they can. So I think overall, I'm going to leave you with a bullish comment. So thank you.
All right. Well, thank you, Jose. To me, the takeaway from your presentation is literally the market hasn't changed as a result of the COVID experience that we're going through. That's what it seems to me. Would you kind of agree with that?
It's active. It's active. Pricing's been impacted significantly on retail. For certain retail assets, pricing's been impacted on office assets. The demand is there, but it's been an upward sloping curve, right? It wasn't like this 4 months ago, right? It wasn't like this 3 months ago. But now we're just seeing a lot of activity. And I think, as we go into 21, there's uncertainty, right? And doesn't matter who wins the election, there's uncertainty. There's just a cloudiness with what direction the economy is going to go in. And I think that's leading groups to say today, I want to see, I know where we stand today, so I want to test the market. I want to see what's out there in terms of pricing. And that's driving a lot of the activity. So yeah, I don't know, I would go so far as to say it hasn't changed. It has changed. It's different. But what I've been surprised at is the activity level, the amount of transactions. I mean, we probably have $1.7 billion in the market right now across product types, where go to pre-COVID this time of year, last year, yeah, it would have been pretty comparable in terms of volume. But the pricing's different, the underwriting's different, and the buyer pool has changed. Some groups that weren't active last year are active today because they see opportunities, and vice versa. So the changes are there. It's easy to get caught up in the volume, but the changes are there.
All right. Any questions from our audience? I am not seeing anything in the Q&A column. I'm not seeing anything in the chat column, so I'm assuming that everyone's questions were answered. So with that, I'm going to thank Jose again for his fine, detailed presentation. Jose, you're certainly welcome to stay for the second half of the program.
I'd love to. Can't wait to hear everybody else.
Absolutely. And with that, I think we'll move right into the women's panel. Hopefully all our women are ready. Okay. So let me start off with a kind of a couple minute commentary. For many, many years, women have faced real obstacles such as pay inequality and a lack of senior management positions as they competed in a male-dominated commercial real estate industry. The Mid-Atlantic Real Estate Journal has recognized this and has decided to make this a central theme in our 6th annual Commercial Real Estate Leadership Program, and we've titled it Women in Real Estate 2020. We've structured this panel as an informal discussion centered around our speakers' professional careers, the successes and failures they experienced, the obstacles they had to overcome, how they competed in the marketplace, the skill set they needed to be successful, their vision for the future, and the opportunities they see going forward for women. So this morning, we are featuring 6 women who have succeeded in their quest for recognition and leadership responsibility. I hope our attendees find this panel to be inspirational and thought-provoking. So let's begin by meeting our speakers. I'm going to introduce each one alphabetically. I'll just spend a few minutes on each, and then we'll go in and we'll get into our discussion. Kathy Anderson is a founding partner of Progress Capital. She has more than 25 years of banking and finance lending experience. Her core proficiency is in originating and structuring commercial loans with regional banks, insurance companies, and investment banking firms. She serves on the board at Regal Bank, headquartered in Livingston, New Jersey, and she has been retained and is retained as an expert legal witness in commercial real estate litigation, as well as she is a frequent speaker at a number of industry conferences, including this one. Next is Danielle Brunelli, president of R.J. Brunelli & Company, LLC. She is a graduate from Monmouth University. She concentrates on tenant representation work primarily, having done major transactions with such tenant names as Dollar Tree, Family Dollar, Massage Envy, Mon Acupuncture, and a number of others. She was recently honored as one of Chain Store Age's magazine's top real estate performers. In addition to her work, she is heavily involved in guiding junior salespeople through deals and assisting associates and partners in marketing their properties and helping them with their own tenant rep accounts. Next is Veronica Ferreira. She's an assistant vice president and community lending coordinator for Emigrant Mortgage Company. Emigrant Mortgage Company is a wholly owned subsidiary of Emigrant Bank. Veronica's primary function is originating residential mortgages for purchases and refinancing of 1 to 4 family homes with cooperatives and condominium properties as well. She also has her hand in originating small balance commercial and mixed use mortgages, as well as a number of transactions in the SBA space as well. In addition, she spends some time in her extracurricular activities, and she's involved in such committees as the Long Island Real Estate Group, the National Association of Professional Women, the Queens Chamber of Commerce, and the list goes on and on, and she's been with Emigrant for over 30 years. Next is Erica Figueroa. She is the marketing specialist at Next Generation Services, LLC. Next Generation provides comprehensive account administration for self-directed retirement plans. The firm's mission is to provide white glove customer service, ensuring their clients have the knowledge and support necessary to control their financial futures by investing in alternative assets like real estate through self-directed retirement plans. Erica's main responsibilities include educational content creation, new account setups, trade shows and event planning, social media management, website management, and email marketing. Next is Sadie McEwen. She is the EVP and Head of Construction Lending and Initiatives at Community Preservation Corporation. She oversees the company's construction lending and sustainable initiatives, as well as the operations of the many field offices located throughout New York State. She is responsible for spearheading the company's innovative underwriting efficiency practice that incorporates energy and water efficiency features that involve the financing of first mortgages for multifamily owners. She has a master's degree at Cornell University, or from Cornell University, and her bachelor's degree is from Fordham University. Finally, Randy Schoenja is an attorney. She is a member of Sabre LLC's Real Estate Practice Group. Her practice emphasizes both complex real estate and financial transactions and all aspects of transactional and regulatory environmental compliance issues. She has broad experience in construction, purchase money and leasehold financing, as well as acquisitions, sales and leasing of all types of real estate, including shopping centers, retail establishments, industrial complexes, and apartment buildings. And with that, I want to welcome all our women to today's panel. And let's get into it. So let me start off and ask the first series of questions. This is literally for all the women on the panel. You certainly can take a shot at addressing all these issues or some of these issues. I'm happy to call on you, or you can just raise your hand, whichever way you want it, start it. And here's our first question for the panel. How has the role of women, in your opinion, changed in business since you started your career? Randy, you can start off.
Okay, so when I started, which was, more than 37 years ago, there were very few women in leadership positions. And speaking from law firms, there were very few partners who were women in law firms. And those that were in law firms were not the managing partner or the partner in a leadership position at all. The same was true when I was dealing with general counsels. Almost never, up until maybe 5 to 10 years ago, did I deal with any women general counsels, or even women presidents of companies, vice presidents of companies. It's really only, I would say, 10 years where now it's commonplace to have a woman general counsel, a woman managing partner, and it still makes today the paper or the announcement, the first female, managing partner in a firm, or the first female CEO. So that has really changed from when I initially started.
Ron?
Sadie, yes.
I completely agree with Randy, and I just want to add that the other place that you are seeing more women now is in the boardroom. So I've been at CPC since 1991, and we were primarily, I think there was, in my tenure for the first 20 years, I think we had one woman on the board. And over the last 10 years, we've made a concerted effort to change that. After the first financial crisis, CPC went through a restructure. And some of the feedback we got was we needed a more diverse board. And a big piece of that was females on our board. We're an affordable housing lender primarily. I think that female leadership brings more empathy and brings a different perspective. And I think it's an important role, particularly in the boardroom, where you're crafting strategy and making decisions that in the absence of a female or women in the room, I think lack the kind of empathy that a female brings to the table. So it was great for me to see the changes at CPC. And I think that's a broader statement as it relates to other boardrooms as well.
I see a couple of the other women shaking their heads yes, so let me see what they have to say. Erica, you were shaking your head yes.
Yeah, I know that I don't really have a lot to say. I've only been in the professional world for about 5 years. I graduated college in 2015. So I'm a bit younger in the crowd here, but in my career, I've always worked for either women-owned or women-led businesses. And I find that to just be extremely, empowering. Just kind of being able to work for and in the midst of, these very ambitious, very strong, leadership focused women. And I find it refreshing because, I've worked for, male led businesses. And I think that kind of empathetic component is definitely more my style. I appreciate having a leader who's not just revenue focused, but focused on their clients and their people. And that to me is very important. Being a marketer, our people and our clients are everything to us. So I find it, very refreshing, very empowering. And I don't think that I would ever want to work for a company that wasn't, either woman owned or woman led.
You just answered my other question related to that. Danielle, yes.
Yeah, I just wanted to say, so I've also most of my tenant rep clients have all been women from Dollar Tree. I started working with them about 11 years ago, and the regional manager had just got hired for my area, and she, talked to other women throughout the United States, and they all kind of recommended me in this area. And since then, she's been promoted to director. Sally Beauty, it was a woman. Tuesday Morning, it was a woman. So there really weren't that many women, but it just seemed like we definitely support each other, and we work well together. So it's been great, having more women in our industry.
Okay, anybody else want to take a shot at that initial question? Okay, so as a lead into this, can you point or can you talk about any particular project or transaction or accomplishment that really you felt put you on the map to your climb up the corporate ladder? Erica, go ahead.
Sure. So this one's kind of exciting for me. I think in the role that I'm in now specifically, I've been rewarded a lot more independence and a lot more problem solving and kind of decision-making opportunities. So in addition to the website redesign we went through, it's been one of our CEO Jamie's longtime goals for our clients to be able to open accounts 100% online. And so what that means for our clients is convenience. So previously on our website, if you wanted to open a new account, you'd be able to download a PDF form, and then you'd have to fill in them, sign them with your wedding signatures, and then mail them into our office. And that not only is time consuming because, snail mail is snail mail. It takes a bit longer than it would if you were to email or fax it. So being able to have that convenience for our client was extremely important. And we kind of went through solution after solution, trying to figure out kind of how we were going to be able to accomplish this without it being, extremely complex. So fortunately, we signed on with a vendor that would allow us to have clients electronically sign documents. And I realized that there was another solution and another feature within that tool that would allow us to take all of our digital forms and make them available on our website. So now our website includes all of our forms, ready for digital signature. So you would literally just be able to go to our website, pull up one of our starter kits for our new account applications, and fill and sign it right then and there, and then submit it. All of those come with extremely intuitive and, triggering features. So not only is it easy for the client, but it allows them to do it accurately. So there's no follow-up needed, no corrections with any of our sales team members. And, if there is any follow-up required, it's usually very, very, very minimal. So our processing times have significantly reduced, which makes the investment timeline for our clients, drastically shorter. So I feel very empowered and, definitely very proud of myself that I had a role in making that possible.
Kathy, let me get you into this discussion.
Having done this for 30 plus years, I don't think it's about, maybe one thing that was done right or wrong. It's just a culmination of when you do the right job and you service your clients and you produce results. Sorry, good things come from that. And I have started my career in real estate. First I was doing workouts. Then we were helping people raise equity. Then, banks were saying, bring us mortgages. So my career was sort of defined for me by just walking through some doors and not saying no to taking a risk. So I think the worst decision that you can ever make is to make no decision. So you take a step forward, you do a good job, you're persistent, and I think it's just a lifetime of doing the right thing, creates a career.
Now, I'm going to switch gears before I get to Danielle. Jose is still with us, so I have to ask this question of Jose. Jose, you're the only man on the panel this morning. In your 35-year experience, have you ever worked for a woman? What were your thoughts, plus or minus?
Yeah, I did.
I'm putting you on the spot, but that's okay.
No, it's all good, all good. By the way, it's 25 years. You consistently
25,
age
sorry.
me, Ron.
I know.
Age me, okay? No, I did actually. Back when I started, just actually pre-real estate. I was pre-real estate for 2 years back in '91 when I finished college, and I worked at Payne Weber and worked for a woman there, and it was great. Very strong-willed, smart person, and I even to today still think about some of the trends that she said, and it was great. I mean, she was someone that really, I think, utilized her knowledge, incredibly knowledgeable in the financial world. I mean, it was non-real estate again. It was more so it was dividends, so stock market related. But it was a great time and it was a great learning experience for me. So yeah, I've been fortunate.
Danielle, you wanted to say something.
Yeah. So I guess about 12 years ago, our firm was hired to work on land on Route 3 in Clifton to figure out what we should do with it and how to create the best use for the property. And, I was part of, basically my father and I drew on a piece of paper a plan. And, over several years, I pre-leased it's now the promenade, the Clifton Promenade, and it basically achieves the highest rents and highest volumes in all of New Jersey. So I think being a woman, being in retail real estate, we kind of know retail and how it needs to work together and who should go next to each other. At that time, the women Talbots and Ann Taylor, Loft, and all those stores were expanding. So it was nice to be able to put together a really great tenant mix there. And that's when I started with landlord work. So it was nice to be able to draw that on a piece of paper and now see it built and be so successful.
Veronica, let me get you into the discussion.
So being in the mortgage business in the beginning 30 years ago was unheard of, having a woman and especially a woman with small children. So that was a huge obstacle for a lot of women to start in the mortgage business. So over the 30 years, I have reinvented myself so many times to accommodate to the market and to the needs of the market. So the focus was sometimes on residential, sometimes on commercial. So over the years has been always recreating the approach on how to reach out to different markets and how to reach out to different customers. So kind of, when you're in the mortgage business, you're your own boss. So every morning you have to be kind of very creative of how you're going to tackle the business. So I'm so happy to see more women in the mortgage business now, contrary to 30 years ago. So we've come a long way.
Yes, Sadie.
Just building on that comment about the mortgage business. So I'm in multifamily mortgage, the multifamily mortgage business, and in 1993, when I would go to MBA meetings, and it's still primarily this way, but it's a sea of men, with very few women present. You see more women over time, which is great. And CPC is a very small player in mortgage banking in multifamily. We had a small license with Freddie Mac that was restricted to New York. We pushed to get a small balance loan license so we could do more small balance loans. We got that from Freddie. We also got an affordable license. We have 2 HUD licenses, and then Fannie wanted to give us licenses. And so through building our business and our pipeline and needing those products, because the GSEs are starting to move into the markets in a much bigger way. The growth has been exponential in the multifamily side over the last 10 years. To be relevant, you needed those products. And over about a 12 to 18 month time frame, we essentially built a mortgage bank with 7 licenses inside of a not-for-profit. And that, for me, was really transformative because it's very culturally inconsistent with a not-for-profit affordable housing lender who cares about impacted neighborhoods. Now we had to feed the beast and keep Freddie Mac, Fannie Mae, and our HUD offices busy doing larger GSE transactions. So we built a mortgage bank inside of a not-for-profit, got the attention of the GSEs. We're the only CDFI mortgage bank in the country, which is a community development financial institution. And then we were able to attract the kind of talent that we needed to then drive the business. And so we're still in the process of building that. But for me, as I started doing construction loans on 3-family homes in Yonkers, and so for me, all these years later, to say that I was critical to help build that mortgage bank inside of CPC to make us even more relevant, to be able to share our licenses with other CDFIs across the country, to empower other not-for-profits, taking a different look at mortgage banking from a different perspective, and setting aside that it's just about volume and competition, but rather that this capital is powerful and important in neighborhoods and communities, and figuring out different ways to bring that capital to neighborhoods and communities, and not just do transactions for the sake of transactions. That, I think, has been the thing that I'm most recently proud of in my career, because it is very important. When you talk about infrastructure, money is infrastructure, capital is infrastructure. So being able to bring capital to every corner of the market, whether it's real estate or economic development, jobs, having the ability and the power to use capital to create change, in my career has been very important.
Anyone else want to respond to that particular question? Randy.
So I agree, Kathy, totally with you that it really is a culmination of a lot of years of work that get you to where you are today versus one project. But one project really does stick out in my mind. About 2 years ago, we were approached by a client literally for a 2-week time frame. They needed to close on a very large light industrial property. We had environmental issues. We had loan issues. We had, which was I considered the icing on the cake, it was a reverse 1031. And I've done a whole host of 1031s, but reverse 1031s are really not that common. Within 2 weeks, we did the environmental, we got the financing in place, we did the reverse 1031, and we closed the deal. And what made me proud of this is this entire team was all handled in my office by only women. Everybody outside the transaction was all women. We did it in 2 weeks. We did it in the time frame necessary. We did what we needed to do, and the client is still a client, and they were very pleased with it. And that transaction just sticks out in my mind because the timing and what needed to get done was all done, and everyone just rolled up their sleeves and did it.
Does that mean that if you had a man on your team, it would have gotten done in the 2 weeks?
No, but
Okay, I just
the
thought
one
I'd throw that
thing
in.
the one thing I really do believe that women add to is teamwork. I think we work much more better in teamwork. Not to say that men don't, but it is, I think, a trait that women do use. And I see head shaking, so.
Is there one particular skill or personal characteristic that you individually can point to that women who decide to have a career in business should either acquire or have? Erica.
I think for me, the biggest one is confidence. I think if you have the confidence, that comes with, willpower, ambition. If you have the confidence to get something done and you can accomplish it, then I feel like that's all you need.
Yeah.
Yes, Sadie. Oh, I'm sorry. Who's?
Go ahead, Kathy.
I've
Kathy.
realized that. Yeah, I've realized that in my career, persistence has been a really strong quality that we have needed, because you have a lot of road bumps that whatever your deal is, whether you're buying, selling, financing, you're an attorney, there's going to be road bumps, and the ability to be able to pivot and see your way through to the end and come up with the solution. I've always been solution oriented as opposed to problem oriented. And I think that has helped me to be able to advise my clients, the people who work at the office, how to see the path as opposed to seeing what the problem is. So, that would be what I would say would be an important quality for anybody in business.
I was just going to add that it's really relationship building that's important. To me, real estate is bricks and mortar, mortgages is money, but all of the business is about people. Mm-hmm. And so your ability to create a relationship with whoever it is, whether it's a retail tenant that wants to move in or whether it's a large developer that needs to borrow hundreds of millions of dollars, you have to look someone in the eye and to Erica's point, with confidence, create a relationship so they can trust you and build on that trust, because that's when, to Randy's point, they're going to come back. They're going to be happy. They appreciate what you did for them. So really trying to get into their head and understand what they want from their perspective and figure out how to give it to them from their perspective, creating as little conflict as possible. And to Kathy's point, finding the solution and taking them there together, I think is really important. To me, my relationships with people have been the foundation and bedrock of all of the success that I've had. I don't think that's exclusive to women, by the way. I think that's the most important component.
Veronica, what do you think?
I think that one of the key success points is the patience to listen the needs of the client. Over the years, I think that I have put that forth most important to the clients as to what are your needs? What are you looking for today? Where are you going to be in 5 years? What do you need in the short term? And that has been the key to my success for the repeat business. So over the 30 years, I think that the repeat business has followed me because I have listened to the needs of the client. Now, it doesn't matter how big or small the deal is, they have my full attention and they know that I am going to deliver what they're looking for, because that's so important.
But
Randy.
I also think one characteristic, and I don't think it's unique for women, is in this business, you need to have a little bit of a thick skin and somewhat brush off. Not every deal is going to happen, and it's not always going to be your fault it doesn't happen. It just doesn't happen. Sometimes the deal is going to go awry, and it isn't anyone's fault. Things happen. And I think we all have to then just say, we understand, how are we going to get to the solution to fix it, as Kathy said. But then we have to sort of brush it off, pick ourselves up, and do the next deal.
That's a good point. I always say when I bring new people in, I can always tell who's going to be successful, but not by how much they can do, but how quickly they can get over loss. And that's the hardest part because people carry it around with them for too long, and it's really not necessary. You just look forward. That's why the windshield's bigger than the rearview mirror, because you got to keep your eye on moving forward and stop looking backwards.
Yeah, I agree. I think focusing on the solution and not focusing on blaming somebody for what happened, but rather saying it happened. How can we change things? How can we fix things so that it doesn't happen again and we all learn from it and we can all work together on that solution, I think is really important.
So continuing through this thought process, as a woman, continuing your success in a so-called male-dominated industry, have you ever been told that you are or were too ambitious or too aggressive? And how did you react? And what did you do to counteract that?
Listen, I'll go. I would take that as, I don't think that is, to me, my clients want me to be, there's a difference between aggressive, meaning obnoxious, and aggressive, meaning persistent and assertive. So I would say my clients pay me to be assertive on their behalf. I'm their advocate. I have to show up at the banks and fight for their rates or fight for their loan terms or fight for whatever's important for them. So I don't think that I have ever been told I'm too assertive. If I was, it would probably be a negative. So I think assertive and aggressive sometimes get confused.
I have to think other women have comments on this. Randy.
Well, I will tell you that, and I'm probably not proud of it, but I have been on a number of occasions told that I'm too ambitious, too aggressive. And I think it has to do with the fact that I speak in a very definitive and affirmative style. And that's how I carry on most conversations. Or I'm overzealous on something. And my position is, as the attorney to represent the client, I need to do that for them. And one particular matter comes to mind a number of years ago where I was doing a loan transaction and we had a all-male set on the other side. And I basically said, this was when the transition waivers came in for wetlands. It's a number of years ago. And distinctly said, you need a transition waiver. And was told, you don't know what you're talking about. You're just being way too ambitious in this. Just let the deal go forward. And I just stuck to my ground. I stuck with the facts. I presented my case and I tried to prove them wrong. And ultimately they needed one. And I think that's what we need to do when we're presented with you're being too ambitious, you're being too aggressive. I'd say you just stick to your facts and show them that you're right.
Anybody else want to comment on this issue? I'm seeing a lot of smiles, but I don't see anybody raising their hands. Okay, let's move on. If your son or daughter came to you and said that they want to kind of follow in your footsteps, what would you tell them? Yes, Danielle.
I have a 9-year-old daughter, and I would say go for it because she's an awesome negotiator and she's relentless.
Two more characteristics.
She's really good at it. No, I'm so happy that I chose my profession, and that's all I wish, that my daughter loves her job as much as I do. So I love that.
Sadie.
I have 2 daughters, 19 and 20. And I am, I've encouraged them to follow in my footsteps insofar as they should become leaders. They should have passion. They should find something that they love to do, and they should do it, and they should try to be the best person doing it in the room. And what strikes me about my daughters is that they don't see the obstacles. They're 19 and they're 20, and they see it as everything is possible. And when I was 19 or 20, things weren't so possible. You know, when I first came into the workforce, my father was in advertising, and I got hired as a Gal Friday. And that today is such an insult. And I would never encourage my daughters to become a Gal Friday. And they would never even think to pursue that, because there's so many opportunities that are open to them, that are open to people of all types, of all colors, races, genders, anything. The world has changed so much that I'm excited for them, that it's going to be a lot easier for them to get to where I got to. But what I tell them primarily is, find something you really are passionate about. Find something you love to do and follow it. Don't settle for doing something that is just a paycheck, because that doesn't, you're never going to want to do more. You're never going to want that next job or that next promotion or to be a leader if it's just about a paycheck. So, and they're, you know, so far so good. They're doing that, and I'm very proud of them. So.
I'll just interject for a second. I don't have any daughters, but I have two sons, and I started my business when my youngest son was first born. So they've seen and they've grown up with me and seen how passionate I am about what I do and how much I love what I do. And they have migrated to the business. I've always opened the door for them for when they wanted to come in. So I get to work with both my boys every single day. We get to build a business together. We get to share life. We get to share deals. We get to share successes, failures. And it's an amazing thing. So I love it.
So I'm taking from this last question is everyone, and I'll get to you in a second, Veronica, everyone would say real estate is a great field for the young-hearted, and you would not suggest, recommend, or guide them out of real estate. Yes, Veronica.
So I have a daughter who was very small when I first started in the business, and she saw how I struggled and how it took me so long to get to where I am. And she is now such a leader in her field. She's a teacher. She knows about real estate inside and out, but she is so, if you want to call it, aggressive, but she is such a leader, and she has taken so much from me that I guess she heard me through the years, and I'm very proud. And if she ever wants to come into the business, I would love that too.
In your climb, in your respective fields, did you have an opportunity to associate yourself with a mentor? And if you did, how should a mentor assist a young real estate professional in his or her career going forward? Yes, Erica.
I like talking about this one. So personally, obviously, my mentor is my mother, as always. But professionally, I've definitely grown to love our CEO. She has been in the real estate business before she created the company for many, many years. She's a real estate broker. She's a real estate investor. And, you know, I had been interested in getting into real estate myself. I'm in the process of looking into real estate courses to become a licensed agent. So I'm excited about that. But in addition, I will go to her for pretty much anything. If I need direction, if I need guidance, she always has insight. And I think because of how experienced she is and how strong-willed she is, you know, obviously she saw a need and created a company as the solution. So I just see that as, you know, a great value add. I've always been interested in real estate, not just becoming an agent, but real estate investing. So to have her kind of in my toolbox is definitely a good asset to have.
So it sounds like you can share anything with her you want.
Oh, absolutely. She has a 100% open door policy. Like, I can go to her about anything, and she'll always find a way to, support, to provide, advice, or just to lend an ear.
Randy.
So I did have a mentor in the past. Ron, you actually knew one of those mentors. I worked for two men. They were not a women. They were two men who were partners, who were senior partners in the law firm when I first started out, who I was lucky enough really to have them see fit to give me the opportunity. They took me to every client meeting. They sat down and just taught me the business from beginning to end. They took me to every MBA meeting, which Ron knows. I currently obviously don't have a mentor at this point. I like to think that we all are at this point mentors for younger attorneys, at least for younger people in our field. But what I find now is I have a few good close friends who have high leadership positions in different types of industries, and we sort of mentor off each other. We don't compete with each other, but we work off each other. We strive to both talk about things together and feed off each other at this point. I'd be curious if anybody else has that.
Danielle, you're smiling. You're in a family business. What do you think?
Well, definitely my father was my mentor, starting out young till today. He still works with me on deals. Randy, to your point, we definitely, just other brokers, other associates. We always are, helping each other and discussing issues. But yeah, no, I'm fortunate that I grew up in the business that I'm in. My father would take me to every meeting when I was 16. I would be writing his letters when I was, 18 or what. I got my real estate license when I was 18. So, yeah, no, that was my mentor, my father.
Kathy, I think you wanted to say something.
Yeah, on what Randy was saying, when I was young in my 20s, I had the fortune, I was fortunate enough to work for a man who had a CPA firm, and he always encouraged me to have a voice. He would bring me into meetings. He would bring me, to put me in front of clients, encourage me to talk on the phone and interact with clients. And I've passed that down to the people in my office. I want everybody interacting, interfacing, with clients, because it does give you confidence in yourself. And, as you develop, sometimes you don't need a mentor anymore, but I still have a business coach. It comes into our office once a month. We go through our numbers. We talk about the future. We talk about business planning. And it forces you to take, a block of time out of your day once a month to say, okay, I'm not going to think about anything else, but what's the next step? How do we grow the business? So I encourage that for anybody who is running a business or is a managing partner of a business, because it really does help keep you focused on the prize.
Anyone else want to respond to that? Yes, Sadie.
I want to agree with Kathy on the executive coaching. We've done a good bit of that at CPC, and it really is extremely valuable. And it definitely keeps you focused on what's important. For me, individually, I lost my mother when I was very young, so I developed the skill of trying to look for bits and pieces of what I wasn't getting out of having a mother in other people. And then having that skill, when you go into the workplace, you observe everyone, and you're able to take a little piece of each person and build your own sort of mentoring base. And I did have one mentor when I started at CPC. He's still here with me today. And he was exactly what you described, Kathy. He always put me in front of customers, encouraged me. He didn't have an ego that kept me down. And I think sometimes when you're in a male environment and you're a strong woman, there's a competition that comes in, and men try to keep you down. If you find the right mentor and you get promoted and pushed forward, you can develop the confidence that Erica talked about, which is really important. And then you're so grateful that you had that opportunity. You can't help but pass it on to other people that you want to benefit from the same things that you benefited from. So mentoring to me is the single most important thing that I can do as a leader. it's little small things like talking to somebody at the water cooler or the coffee machine. And then it's also identifying opportunities for people to step outside of their role and do something different that helps the company and expose them and bring them forward and allow them to say, I can participate at a higher level too. And so it really is paying it back, paying it forward and paying it back. And to me, mentoring is the most important thing that we can do as women leaders.
Now, let me move along and talk about the educational requirements that you see as important in your respective fields. Some of you have master's degrees, others don't. That's fine. But what is your perspective on whether or not an advanced degree, whether it be a master, an MS, or an MBA, or a law degree for that matter? What's your perspective as to the importance of an advanced degree for women to be successful in real estate? Erica.
So obviously I did 4 years of college. I thought heavily about getting my MBA. I decided not to do that because I feel that experience really trumps any degree that you can have. I never did well in school, but I do very well professionally. And sometimes I think for people, it's easier for them to apply themselves than it is for them to read a book and try to figure out what it is, and what direction that they're supposed to take. So I think that kind of having that educational foundation is important, but obviously being able to apply what it is that you're learning to real life experience is the best way to learn, through successes and failures. Me personally, I have, in the short 5 years that I've been out of college, have done a lot of learning, a lot of growing, and I've quite honestly learned more throughout, doing my own kind of professional development than I had in my 4 years of college. I actually did 5 years of college. But I learned so much more just kind of going out there and learning more about what it is that I'm interested in and what I'm passionate about. And, that has really helped me succeed because I understand, what it is that I'm interested in. So I'll think to myself like, oh, hey, I want to learn more about SEO. And so I'll go onto Google and the internet and I'll see, what, SEO courses I can take, what certifications I can get, and then I'll kind of work from there. I think sometimes being in a traditional, educational setting is just not ideal for some people because some people learn better by doing.
Randy.
Well, obviously, it depends on the field. For law, you need an advanced degree. You need a JD to go into the law field. But for other profession within real estate, I agree with Erica that at least you need a college degree, clearly. But after that, I think you need a number of years of work experience to really kind of find out where you want to go and what you want to do within the field before you just jump into getting an advanced degree. Because I think the advanced degree at that point isn't going to be as valuable to you without the direction of where you want to go.
You think there's too much emphasis or stress on an advanced degree to begin with?
I have a master's degree, and I undergrad, I was a journalism major. I didn't know what real estate was except that it was where I lived, right? I had no clue. And then I became interested in homelessness and why are people homeless and how do you solve for that problem? And real estate became important because I wanted to house homeless people. So I went back to graduate school so that I could learn more about that. And I could access opportunities that would get me closer to figuring that out. I actually had a degree that was half an MSW and half an MBA before those degrees were available. Now the not-for-profit management is very much available. And it was good for me because I was in the B school half the time at Cornell, which is one of the most intense environments you can be. And the other half the time I was in human ecology, which, people are in tie-dye and Birkenstocks. So culturally, I had these two worlds that I had to bring together. So it wasn't about learning how to underwrite mortgages or figure out what debt coverage was or how to evaluate real estate. It was maturing more as an individual and as a professional and learning what interested me and having opportunities, because the connections that professors at Cornell provided me, they put me on the path to where I am now. And I've only had one job since graduate school, and that's been CPC, but I did a summer at HUD working for Jack Kemp. That's how old I am. And then from there, I found CPC and I became an intern at CPC and then a full-time employee. If I hadn't gone to graduate school, I would have gotten to wherever I got to, because I'm ambitious and all those good things. I would have gotten there a different way. So I'm not suggesting that I needed to go to Cornell to get to where I am. Maybe I would have found CPC and without going to graduate school, but maybe not. That doesn't mean I wouldn't be successful wherever some other path took me if I'd never gone to graduate school, because my success is not a byproduct of my degree. It's a byproduct of me and my ambition and my interest. So you don't need, it's a nice soundbite to be able to say, yeah, I have a master's from Cornell. People listen to that, but it certainly didn't make me successful.
So if one of your employees or one of your associates approached you and basically said in confidence, I'm thinking of leaving the firm and getting my MBA at ABC school, whatever it may be, would you say, go for it? Or no, you shouldn't do that. You're really wasting your time because, the additional 2 or 3 years of experience here at the firm will be more useful and would further your career further. How would you advise that person?
Well, the first thing I would ask them is why? Why do you want to do that? Is it because you have a different interest? Is it because, we're in the middle of a pandemic and getting an education at this point might be, I went back to school during a recession. I worked at a financial services company and it was a recession. Company filed Chapter 11 and I went off to graduate school. The timing was great for me. Jobs weren't as abundant at the time. So timing is something. And if they feel like they have had enough experience and their interests lie elsewhere, sometimes, to me, an advanced degree is a good way to transition. But my father, who is my mentor and the most influential person in my life, barely finished high school, and he graduated high school and built himself up and built his own business and was very successful. And I evaluate a lot of financial statements from guys who didn't even finish high school, and trust me, their net worth is far more impressive than mine, because they've been in real estate and they bought buildings and they built buildings and they've sold buildings and they've created tremendous wealth for themselves in ways that are very unconventional relative to the way everybody thinks you have to go, which is graduate high school, go to college, get an advanced degree. Not necessary. It's not for everybody. To Erica's point, wasn't for my dad, but he was wildly successful. So it depends on the person.
But Ron, I wouldn't discourage somebody who would come to you, and I agree, ask the question, why? What are you looking for? Is it just another few years not to be in the workforce? But if somebody wants to go back to graduate school for whatever, I would ask them the question, but I would encourage it, because my opinion always is additional education cannot hurt.
Anyone else want to mention or have a
Listen,
say
I
anything?
also think that once you get past the resume part, when you're coming out of college, that becomes less and less important. Unless you're an attorney or doctor, there's certain fields, like we'll just put them on, that's a requirement, teaching. But in our business, the education is a continuing education. It's reading, it's understanding, it's constantly keeping up on what the trends are, what's going on in the market. You can't, whatever you learn at school, you can apply for a little bit of time, but it's that constant reading and absorbing and seeing what's going on that's really more useful than advancing a degree in our industry.
Now, you all have been involved during your careers in outside events, whether they be pure joining organizations, networking at various schools. My question is this a is this a pattern that you feel is well worth the time? And would you suggest to the younger generation that's coming into the business, your business, that this is a great way to advance their careers? Any thoughts on that? Danielle?
Yeah, I think definitely being in the real estate industry, it's a relationship business. And over time, you just build more clients over time. So talking with other people and meeting other people, and it's definitely key to being successful. So in my industry, we're all part of the ICSC, which is the International Council of Shopping Centers. And this year is the first year I haven't gone in 20 years because of COVID. But it's definitely, it's a very small industry, so I pretty much know everybody by meeting them and having meetings, etc. And then also I wanted to know Pipeline, which was created by Julie Fox. Pipeline is a women's only organization for women in real estate. There's 175 women in it right now. And she sets up calls once a month, or, prior to COVID, it was meetings once a month. And we just basically, talk about maybe an issue or just something that everybody be interested in. And we also just have fun together. And so Pipeline has been pretty cool, and it's growing. So if anybody's interested, I would, encourage you to join.
I must say, I've never heard of that organization. Pipeline, like a real oil pipeline.
Well, yeah, I'll get you
Okay.
the information if
Okay, well,
anybody wants to get into it.
happy to send it on to our registrants. I think it's good information. Anyone else with any other organization or networking events that they would recommend? Randy?
I mean, I think it's really, I agree with you, Jen, that trade associations are very important. That's really where you meet other people in your discipline. And at least for me, one very important kind of association is not really a trade, but more like an academic association within your discipline, where you can go to and you don't feel like you're competing for customers or clients, but you can just, you've got people to share where I've got this issue. How do I resolve it? How have you resolved it? Have you ever had this issue in the past? So to me, that's a very important type of organization. I also think it's really important to look outside your field. Belong to some, you play golf, you play tennis, belong to some kind of an organization. You're meeting people you become comfortable with in a setting that's, you're not always on the business, and everything is not focused on business, and it often turns into business.
If you were a woman and didn't know how to play golf, is that a game that you would take up?
Well, first, I play golf. Okay. So I strongly would suggest that women take up golf. I would suggest that everybody take up golf, but I'm a little biased towards golf.
Yeah,
I think it's a great networking game.
Yeah, I have a great little golf story. So, we often will buy foursomes in charity outings. And it's always me and 7 men and 2 foursomes. And, and that's okay. I love golf. I play it. I'm good. And the women at CPC came to me and said, we want to be able to play. And I said, well, have you ever played golf? Because you kind of have to at least swing the clubs and get a little familiar with it. And they said, well, a little bit here, there. And that very soon after I went to an outing, and I looked around because they were all afraid I'm going to be terrible. I stink. I played a little, but not a lot. And I looked around at the guys from CPC that were playing, and some of them are good, but there's a handful that they don't play. They don't pick up clubs. They don't go to the range. They just get in the cart and they go to the cocktail hour, right? They go through the motions. And I came back and I said to the women, you know what? We're going to do a little golf mentoring. And another woman at CPC who's in a leadership role and I put together a little mentoring thing. We went down to Chelsea Piers. We got 7, 8 women. We got a pro, and they all got lessons. And we did it twice. And now they feel like they are able to go. And even if they stink, because it doesn't matter at an outing in particular, but they get to experience that. And they just thought I can't do it because I'm not good. And that's a fallacy. You don't have to be good at golf to experience the benefits in business of going to golf outings. And so we really try to break down that barrier and get more women to participate. And I agree with Randy. I encourage everybody, whether it's tennis or golf, play a sport. It's very collaborative. It's very collegiate, and the relationships that you make outside of the day-to-day of transacting, it's important, and it means something.
Well, can I
Kathy,
comment on this?
yes.
I cheated a little bit on that because I don't play golf myself, but I raised two very excellent golfers. And golf is a very good way to bond with clients. So we belong to a country club. They play golf with the clients. So my clients, I always send the boys to play golf, and then I show up at the cocktail party.
Mm-hmm.
And it's a way for me to network without having to spend the whole day playing the game. So I figured out a way to do it, but not do it.
If you had to start all over again and pick a career other than the one that you're in now, what career would that be? Randy.
I would probably pick what everybody else does here. The business side of it, though, you put the deals together. And as the attorney, you've done the deal. You've put the deal together. The deal is set when it makes it generally to my desk. And I like actually putting the pieces together. Also, I'm usually telling the client, this is the pros, this is the cons, this is what you have to do with the deal. These are the risks of the deal. But then I usually turn around to one of you and say, this is a business decision. You have to decide if you're going to go forward or not. I think if I was to redo it again, I might take it more from the business side than from the legal side.
Veronica, what do you think?
So I've always been a people's person, and I've always been selling. Ever since I was a young person, I was always in sales. And I think that I would continue to be what I'm doing now because I love to be interacting with people, but I also like, the educational part. And that is what I'm doing now as a community lending. I am teaching high school kids about budgeting, about the mortgage business, about real estate. And that has been so rewarding. I have learned so much from these high school kids that have taught me about their life experience, because a lot of these kids have to work besides going to school. So I think I would continue to be within the sales force, and I just love what I do. I truly do.
So no one wants to be a teacher, no one wants to be a doctor, nothing like that, huh? Erica.
Well, it's actually a funny story. Before I got into marketing, I was a preschool teacher. I did it for about 2 years. It was a great experience. I've always loved working with kids, but honestly, if I could totally just 180 and switch my career, I'd probably get into interior design.
That has relationships to real estate?
Yes.
Okay, I'm still looking to see if there are any questions through the Q&A and chat. And there aren't any, which is interesting. And so I will ask you guys one last question. I'll then go back to the audience and see if there are any questions.
We do have a few questions.
Oh, well, all right.
Yeah. Do you want me to say
Yes,
it real quick?
Please do.
Okay, so this question is actually for Jose. It's from Jared Green, and he asked, how can we be more resilient moving forward?
So I'll look at the word resilient as how do we stay strong and how do we continue to move forward from a business perspective, I guess, is what I'm going to assume you're asking. If you need resiliency from a personal perspective, I'm going to put you in touch with my wife, who's a psychologist, so I'll help you there. But from a business perspective, look, I think right now, the market is challenged for sure. There's a lot of positive trends, but there's a lot of concerns out there. So, I think the focus on kind of moving forward and looking at where the green shoots are, right? We're looking at employment getting more, improving. We're looking at rates that are low. We're looking at capital in the market. We're looking at decisions that are being made to invest capital. I think those are the things to focus on. stay positive on that front. In terms of some of the challenges we talked about them is unemployment's still very high, and there's a lot of concern over how we're going to shake out in 2021 and retail and the impact that's having on so many people's lives today, from the business owners to the suppliers, and how to deal with those challenges. So I think staying positive and focusing on what we can kind of do and where the positive pieces are of that puzzle. But it's going to take some time. It's going to take some time to get back to, and who knows, what we get back to is what we had before and how that plays out. But it takes some time to get the economy and the real estate market in particular to a point where we're going to feel really comfortable like we did before. Pre-pandemic, we were really, retail was showing some signs of deterioration, but really we were rolling on all four wheels here. And I think now we're trying to get back.
Okay. Oh,
And I
sorry. Go
think-
ahead, Leah.
That's okay. And I think Sadie actually had a question for you, Jose. So Sadie, you can go ahead and ask him.
Oh, yeah.
Yeah, I was, you talked about adaptive reuse. We finance a lot of adaptive reuse in upstate cities, and they can transform communities. And so we're seeing, a lot of change in real estate. And I was wondering if the corporate parks, the executive parks in the suburbs that have office buildings that have huge campuses and land, are buyers interested in buying them for more than just the office building and also for the land for development, for housing or industrial or other uses? Because to me, there's tremendous value in those campuses. Obviously, got to get them rezoned and all that stuff, but particularly as people want out of the city. And I didn't know if that was part of what you were seeing.
Yeah, it's a mix, and it's really site specific. And some of the ones I talked about, I actually, when I underwrote it originally, I looked at it as a redevelopment of that office park. And the market has looked at it and said, there's a possibility for redevelopment, but we also like it as existing office and re-tenanting it and putting money into it. So that deal's kind of changed a little bit as we've been marketing it. So in that case, it's likely to stay as office, but I think I mentioned one of the malls we're working on, which is a little over 1 million square feet, and that's likely to come down as a complete redevelopment. I don't know exactly how that'll play out. I think that's going to have a large industrial component. That's going to have maybe some medical office, some flex type space. I think it's going to be a mixed use park. But you're right, Sadie. There's definitely a lot of value in using those existing pieces. And then there's also the situation where, like a 10 asset park, some of the assets get torn down for multi. Some of them get left as office. You consolidate tenants in another building. So they're each going to be a little different, but I agree. There's value across the board there.
It's also part of being resilient. It's figuring out what to do next. Like, it doesn't have to be what it was. I think that's really critical right now going forward. It doesn't have to be what it was. What can it be?
Yep.
So.
Yep, for sure.
And then we have just one last question for Jose. Where you see more opportunity in commercial real estate in a year or two?
So I think I mentioned earlier some of those land and development deals. I like that a lot today. I feel like that repositioning Sadie was talking about and reuse. I think that's and adapting as the economy kind of continues to change and we see kind of where we come out the other side in 21. I do like that repositioning. I mean, there's a lot of value in again, that surety of income, right? And those long-term credit type deals. But if you really want to put that creative stamp on it and utilize the skills that you have and reposition the assets and anticipate trends. And I like the redevelopment, repositioning piece. And that's across product types. So I don't want to, limit it to just taking retail and making it multi or taking office and making it industrial. It crosses the spectrum here in terms of where the opportunities are. But yeah, I like redevelopment, repositioning.
Okay, so our last question for everyone, and I'll give everyone an opportunity to respond. What advice would you give the women in our listening audience if they approached you and said, how should I proceed with my career, assuming it's in real estate? Kind of an open-ended question, but why doesn't everyone take a shot at that? Sadie, you go first.
I think just try, don't limit yourself. Even if you take a job that says you're supposed to do one thing, ask to do things outside of your job. Push beyond what you've been asked to do, and don't limit yourself. You don't like a job, get another job. And I know it's not that easy, but really follow what interests you and what makes you passionate.
Kathy?
Well, this is what I did when I was first starting out, because I didn't start out where I ended up, but I just volunteered. I always volunteered to do, if someone needed something done, I would volunteer. And by volunteering, I worked at a CPA office. Not that I was an accountant, but that's where I worked. And I volunteered to get into the real estate side of it. Then I volunteered to manage the properties. Then I volunteered to, work on the debt. And, it's just by volunteering all the time, I learned all of these skills, and it guided me into what I really liked. So just don't sit at your desk, in your box. Put yourself out there, volunteer.
Randy?
I think what's most important is, at least for me, was when I came across something that I didn't understand or I didn't know, I delved in myself to learn it. Especially when I started out, I litigated for 2 years and then ultimately went into real estate and environmental. And I didn't know all the terms and I didn't have a background in this from originally. And so I literally went out and learned anything and everything. And that was before you could just Google it. Anything and everything about the area that I was practicing in. And I tell people that's how you need to understand what area you're working in, especially from law. If you're in the real estate, understand the business inside out and upside down. And you may have to learn it yourself.
Erica?
I agree with what everyone's saying. I definitely think that you kind of need to put yourself out there if you want to accomplish your goals. Obviously, my mind is kind of always running and always doing. I have a lot of interests, a lot of passions, a lot of hobbies. So obviously I can find myself, being happy, doing a number of those things. So I feel like as long as you put your mind to it and you put yourself out there and you're open to new experience and you have the confidence to be able to take on, all of your successes and failures, then, you'll definitely, be happy and be successful.
Danielle?
Well, specifically in my industry, I was able to put together a deal that was so good for a developer that he allowed me to become a principal or a partner in the deal. So creating equity for yourself rather than just getting a commission check or a fee, if you can kind of make yourself a part of a real estate deal where you become a landlord and you get rent checks every month, that's pretty awesome. So that's kind of one thing I was able to do 5 years ago, and I still get a distribution check from my partner, and I did something similar to that last year. So, my specific industry, I was able to get a retailer, a piece of land, make the whole deal, put it together and align myself with a developer. And the developer allowed me to be part of that partnership.
Veronica?
So it's very important not to be afraid to be outside of your comfort level. You learn so much from putting yourself out there in something that is totally different to what you do, because you always learn something new. Don't put so much pressure on yourself. Things are going to work out, and have goals. Always have goals, short-term goals, long-term goals, because once you achieve those goals, you feel so much better, and you feel that you've accomplished a lot, So success is something that is always makes you feel so much better.
Jose, you get the last word.
The only thing I'll say is, take chances. Don't be afraid to fail. Be persistent. Look, my example, coming out of college, I applied to one place 6 times over 3 years with 6 rejection letters. And I finally got in, and I was there 17 years. So,
Okay, any last comments from anyone before we conclude the program?
Just to say thank you for hosting this and bringing us together. I think these are really important, and I really appreciate it and being included. So thank you.
Thank you for being involved. I want to thank, first of all, I want to thank all our panelists for being involved. I want to thank all our panelists for sponsoring the program. As I mentioned initially, this is a program that we started almost a year ago, but we put it together, and I'm hoping that our audience really found this to be worthwhile, thought-provoking, certainly inspirational, and possibly if we get some good feedback from our program today, maybe we run this again next year. I mean, I'm hoping. But I also want to thank the Mid-Atlantic Real Estate Journal for its production. I want to thank Leah and Linda for being in the background, doing all the heavy lifting, which obviously I'm not doing. The technology obviously held up, which is a good thing. I'm glad that we didn't have any kind of an internet power failure. And with that, I also want to thank everyone again, and be well, stay safe, and let's keep moving forward, and thank you very much for your participation. With that, I will conclude the program. Thank you very much.
Thank you all. Thank you
Thank
for
you.
coming.
Thank you.
All right. So long, everybody.